So you've opened your futures account. That's great, but you still might be a little unclear on how the money works when you buy and sell futures, or how much capital you might need in your account to do a futures trade. Let's walk through how money is handled in futures accounts and some of the features E-Trade has available to make things easier for you. The first thing to understand about trading futures is the concept of initial margin. Initial margin, which is set by the exchange, is the amount of cash you need to have in your futures account to open a long or short position for one futures contract. It's important to note that it's the same amount whether you plan to buy or sell one contract. Don't let the term margin here confuse you. You're probably already familiar with the use of margin in the equities markets, where you borrow money to purchase additional securities. However, in the futures markets, you don't actually borrow funds to trade or carry the position. Let's look at that a little closer. Say you buy $100,000 of stock on margin in the equities markets. You'd need to deposit 50% on the purchase price, $50,000, and then you'd borrow the remaining $50,000 and pay interest to carry the position. But with futures, you can, for instance, trade a CME S&P 500 E-mini contract that has a notional value of $140,000, but your initial margin might only be $7,000. In this example, you would not have to borrow and pay interest on the remaining $133,000. The second thing to understand when trading futures is the notion of mark-to-market. The equity in each futures account is marked to market daily. This simply means that at the end of every trading day, all futures accounts are settled, and money is actually transferred between accounts. So if you have a profitable futures position on a given day, the amount of your profits will show up as cash in your futures account. On the other hand, if you have a losing futures position on a given day, the amount of your losses will come out of your futures account. It doesn't matter if you close the position or not. At the end of every trading day, all futures profits and losses are settled accordingly before the next trading day. Finally, the third thing to understand is the term maintenance margin. After you've initiated a futures position, if the equity in your account falls below the maintenance margin level, you'll be required to add additional funds to your account to bring your equity back to the initial margin level. To facilitate the transfer of funds, E-Trade has built the functionality that links your futures account directly to your securities account. You can automatically have initial margin moved into your futures account, as well as have excess funds moved out of your futures account and back into your securities account. You can choose to do this manually if you prefer, but it's good to know there's an automatic solution available to you. Well, that's it. We hope you now have a better understanding of how money works in your futures account. To learn more about futures or to add futures trading to your account, visit us today at etrade.com/futures.